Hi guys, how you doing? This is Ben, the Real Estate Pro, coming at you. Hopefully, going to kick you some knowledge. So I got this article sent to me from Housing Wire from a colleague of mine, finding buyers before agents. Mortgage industry reacts to NAR settlement. The NAR settlement will give LOs a more significant role in the home buying process and encourage housing pros to pursue dual licensing, experts say. Which I think is interesting because I did a video concerning this a couple months ago, just after the Sitzer Burnett verdict came out. I called it Super LOs, but what I talked about was that I think in certain states, especially in California, and I believe Utah have this set up as well, the California Department of Real Estate, you can have a real estate license and get what's called an NMLS endorsement. And what that allows you to do is that allows you to be a real estate agent and a loan officer all under one license. Now you have to work for a brokerage that's licensed similarly, so you can do both. But it kind of allows you to be a loan officer and a real estate agent. So now, in most cases, that's not the case. Most real estate agents are real estate agents. Most loan officers are loan officers. But I think people that are uniquely licensed in that way, or if you live in a state that doesn't have that setup, but you are a real estate agent and also a licensed NMLS loan officer, I think there's some possibilities there as well. You may be, if you're licensed in that way, you may be able to fill a void here. But anyways, let's go over this article. So the first part of the article, I'm not going to read this whole thing because it kind of just rehashes what they've been talking about, as far as the National Association of Realtors, the settlement just came out this last Friday, what happened during the case, the settlement of $418 million for damages, and that these changes are expected, if the court approves them, are expected to occur sometime in mid-July 2024, which is relatively quick here. The first part is get referrals cozying up to the sell side. So Mike Cordes, let's go ahead and read here. Mike Cordes, CEO at Nexa Mortgage, sent a clear message to over 2,300 mortgage loan officers at his mortgage brokers. Keep your eyes open, keep your ears open, listen for opportunities that are going to present themselves, and be ready to assist more buyers. You should find you should be finding buyers before real estate agents anyways, which is true. Most real estate agents are going to want to know, or most borrowers, I should say, are going to want to know what they qualify for. So the smart thing to do is go out, hey, do we qualify for the loan that we need in order to be able to buy the house that we want? And it's best to do that before you actually start engaging any real estate agents. And most real estate agents, especially buyers agents, today's market are going to want you to do that anyway. Nexa has always been focused on purchase money loans, which means some of its LOs do significant business with buyer's agents. Cordes believes that good buy-side agents will remain highly relevant and garner more business as competitors watch out. Thus, LOs will have to find ways to connect to listing agents or directly with buyers who will need more guidance during the home buying process. These efforts include having open house programs to help sellers and co-marketing home listings with professionals using social media to reach borrowers and sometimes buy leads, according to Cordes. He said he's also interested in seeing where homes will be listed since they no longer be required to be on the MLS. Well, they're still going to be on the MLS. What's not going to be on the MLS, and this is where all the rage is right now, is that you're not going to see buyer's agency commissions. Matthew von Fossen, CEO of New Jersey-based, Absolute Home Mortgage Corporation, believes that the NAR settlement was probably the best outcome to the trade group as it focuses on consumer choice and disclosure. It also avoids new copycat lawsuits, uncertainties, and further potential showdowns with the Department of Justice, which is true. On average, about 50% of referrals to a retail LO come from buyer's agents. And a lot of I get a lot of referrals from buyer's agents. However, with the NAR settlement, listing agents may start dealing directly with home buyers. That's a problem because mortgage LO traditionally have not forged deep inroads with sellers agents. I guess that's true. I've always just wanted to make relationships with any type of agent because most listing agents are sometimes buyers agents as well. So they need some services. They may need some help, and I certainly want to make sure that my name is in front of them, or it comes to mind if they need somebody pre-qualified. Originators may have to pivot by developing better relationships with ways to assist listing agents. You may see buyers agents still be relevant, but LOs need to find vehicles to educate their buyers agents, educate them on how to use seller concessions, for example, to finance buyer paid broker fees. Assisting home buyers and their agents adds more to the LO's plate, which is true. Nick Casilla, a Greenville, Rhode Island based producing sales manager at Cross Country Mortgage, said that it's hard enough to get a loan to the closing table, especially with the rates where they are. Having to be somebody's confidant and advisor on the real estate part would be tough. Casilla said that 80% of the business comes from buyer's agents. He shows up for open houses and teaches courses and firms, which allowed him to build relationships with agents throughout his career. Because most of the agents he works with are full-time, dedicated professionals, he's not expecting a decline in business as a result of the settlement. Um, well, it's going to kind of depend. The good part is buyers, like I said, most buyer's agents are listing agents as well. So, as long as you have a good relationship with them, and since buyers are going to go to an agent, regardless, whether that be a buyer's agent or to a listing agent. I think agents in general are still a good source. So I don't see a huge problem there. But if you do just work with people that are just buyer's agents, you may see an issue. Now, here comes the part that I think is pretty interesting and something that I think a lot of real estate agents and a lot of loan officers need to think about. And if you are licensed, like I said previously, like a state like California, or if you have both licenses like myself, this is something that I think gives a competitive advantage to yourself and something that you should market. So get with your broker, figure out exactly what it is, how you can maneuver this. Like I said, in some states you're not going to be licensed with the same broker. Um, and you may find some problems if you're trying to do loan services for free, or if you're trying to offer real estate services in conjunction with your loan officer services at no cost or reduced cost. You're definitely going to need to talk it out with your prospective brokers. Now, if you're lucky enough to be with the same broker, you can work it out with them. Then that would be a lot easier. On another front, Van Fossen believes that due to the commission lawsuits, LOs may start getting real estate licensees and/or real estate buyers agents may become LOs. It would bridge the gap in lower commission by these professionals starting to take both sides of the deal. Now, I don't know if you can take both sides of the deal. Um, I could certainly see a loan officer who has a real estate license say, hey, we will go and do your loan, and then we will go ahead and provide you the services you need for as a buyer's agent. There may be some caveats to that. Perhaps they're going to require you to find a property. Perhaps you go find a property, go look at it. Maybe you go to an open house. You want someone to put in an offer. You can call, get all of that wrapped into one, meaning you can get your application started, get pre-approved, and then have that same person or that same brokerage put in the offer for you. So there might be some different ways of doing it, but I don't know that you can take both sides of the deal. That'd be interesting. Maybe you can, but anyway, according to Van Fossen, that's a definite potential outcome that a lot of mortgage lenders are looking at legally and in a compliant manner, including Absolute Home Mortgage, which is doing tests with the dual licensing structure. The company had 274 LOs and 38 active branches as of Friday per the National Mortgage Licensing System. However, since real estate agents would transition to lenders, the dual license trend would also have unintended consequences for marketing service agreements between mortgage companies and real estate brokerage firms. Yeah, that might be a problem if your brokerage as a real estate agent has some type of deal with a mortgage brokerage firm and they're decided that they're going to start hiring agents. That could be an issue, and vice versa. Another consequence could be the emergence of real estate agents creating their own brokerages and forming joint ventures with lenders. It would also inevitably lead to even more dark gray areas in RESPA compliance. Yeah, definitely have to get the right people to look at this to fashion it in a way that's not going to get anybody's license revoked. So, going to have to definitely get with legal counsel and look at this very, very carefully and structure it in a way that's going to be compliant. More negotiations, lower commissions. Per the terms of the agreement, MLS participants working with buyers must enter into written representation agreements before touring a home. Consequently, mortgage industry executives believe buyers will pay agents out of pocket or ask sellers to pay their agent fees through concessions. As negotiations are in place, the expectation is the commissions will be reduced. An average real estate transaction typically pays 5 to 6% in agency commissions, including 2 to 3% to the buyer's agents. LOs on average get about 1%. Um, that is, I'm not exactly sure where they got that 1% number, whether they're talking about loan origination fees or being paid by their lender. But my point is, LOs can make more than that. They can make more than 1%, and many times they can make just as much as what the buyer's agent would make in a transaction. It just depends on the loan, how it's structured, and what the needs of the borrower are. Uh, so uh, so anyway, the buyer's representation agreements, that's something that's fairly new. Um, Now there are some states that already require it, so for them it's not new. But for states like where I did most of my real estate agent work over the last, my career, um, buyer's agency agreements, I don't think I've ever had anybody sign one. I know that's surprising to some people, but if you are working with a potential buyer in California, real estate law is that if you're working with somebody, the agency is implied. And on top of that, even if you have somebody sign a buyer's agency agreement, it was just really tough to enforce it. Are you going to get in the way of somebody else buying a house in case they want to, they can go ahead and fire you and use another agent. Why do you want to lock them down into paying you? It just, it can just be it can be a very negative PR move to enforce some of these. And, are you, just like anything, any attorney will tell you, yeah, you were wronged, or these people are, probably owe you money, but what are you going to do about it? Are you going to pony up the bucks to fight it? And there's no guarantee that you'll ever get a dime. So anyway, but now we don't have that excuse. Now these agreements are going to be required if all this goes through. Okay. Um, so Kevin Leibowitz, CEO of broker shop Guyton Mortgage, expects that commissions will get squeezed and some buyer agents will exit the industry. He's been focused on getting referrals from prior clients and online. Thus, he expects the settlement will impact his business far less than LOs who rely on buyers agents as referrals. Um, possibly, possibly. If you're working with just buyers agents, and there are agents out there that just work with buyers, then yeah, you might have an issue. Ryan Tomsello, managing director at Keefe, Bayet and Woods, agrees that more negotiations may happen. Of course, the devil will be in the details, and there are a number of questions about how these written representations agreements will work. Key questions include whether these agreements must stipulate compensation terms, as well as if any permissible compensation offers from listing agents and sellers are prohibited from being higher than the original compensation terms already agreed by the buyer and their agent. My understanding right now, this could change, but my understanding is that you're only entitled to, as a buyer's agent, to what's on the agreement with your buyer. So if you, let's just say that you agree to 2%, 5 grand, whatever that amount may be, and you later find out that the house that you showed, the buyer's agent, or the seller is offering a 3% commission, let's just say, you're only entitled to whatever is on your buyer's agency agreement. So now that introduces some other things that if I were in that situation, I would try and take advantage of it by maybe getting some more concessions, or possibly using that to benefit my buyer somehow. If I can only take 2% and there's another 1% on the table, I might ask the seller, hey, look, you're willing to pay this anyway. Why don't you just make it a buyer's concession, or increase the concession that we're asking for up to the limits? So anyway, there are a lot of different ways to tackle that, but my understanding is, yeah, you can only get what you agreed with your buyer. Disadvantaged borrowers, and what they're mainly going to talking about here, and I'm going to kind of paraphrase a little bit, but disadvantaged borrowers are people with low down payments, people that like people that get mortgages for the Department of Veteran Affairs, and minorities. These are folks that don't have a lot of money. They barely scrape up enough money. And if you do a lot of FHA lending, if you're a loan officer and you're familiar with that, you already know that most FHA borrowers, I mean, they're just trying to scrape the money together just to pay for their closing costs and their down payment, and have to add an additional, you know, 2-3% on top of that is going to be a huge burden. It's just not going to be available for a lot of people. So, so I think the hybrid loan officer or the hybrid agent, as what they talk about in this article, I think is going to be very important for disadvantaged borrowers. Okay. Let's go ahead. I'll read some of this. Under current policy, fees or commissions charged by a real estate agent or broker in connection with a loan from a VA may not be charged or paid by the veteran purchaser. It's unclear whether the VA or the Department of Housing and Urban Development will be able to alter this policy. So a VA borrower can't pay it anyway. Okay, so that's going to be an issue. Now, a hybrid loan officer or a hybrid agent may be able to come in here and say, hey, look, VA, I'm a vet myself. I certainly would look at doing something like that and say, hey, I can go ahead and do your loan, and then I can also help you with, or at least, be a consultant and help you out with the side of the representation, or in some cases, I can represent them directly. Seller concessions for VA borrowers are also capped at 4% of the home purchase price appraised value, and existing FHA rules, sellers can contribute up to 6% concession in FHA borrowers. So there are limits to these concessions, and I'm surprised at how many agents don't know this. They just think, well, we can get seller concession, we'll pay for all of it. No, you can only pay for certain things. This could be a key part of the equation for borrowers with VA loans or FHA loans, as they typically use discount points to lower the mortgage rate paid by sellers. Now, if you do get a seller concession, what's the nice part about that is if you get a seller concession that pays for a portion or all of the closing costs for your borrower or for your buyer, then that frees up the cash to pay the buyer's agent commission. But then that presents the question of, well, with all this information at people's fingertips, especially buyers, because a lot of people will go to the internet and do some research before they ever start even looking at houses or even talking to an agent. They're going to find articles that say, hey, you don't have to pay a buyer's agent commission, and there are alternatives. So you're going to have situations where you're going to have a buyer who's like, well, I'm going to go straight to the listing agent, or I'm going to go to one of these hybrid loan officers, or I'm going to find an alternative to paying these costs. So that is something I think a lot of agents aren't thinking about, is that, and even for sellers, that this information is at their fingertips. I mean, pretty much every major news outlet is talking about how the 6% commission is gone and it's being slashed in half, and which isn't necessarily true. It's not. It's a kind of a way of looking at it, I guess you could say, but that's not actually what's happening here. But that's what the public is seeing. So you as a listing agent, if you're at a listing appointment, you're going to have a fair amount of borrower or fair amount of home sellers that are going to ask you about this. And, we have a fiduciary responsibility to tell them what the situation is, what their options are, and, and let them choose, being informed of the options, let them choose how they may want to move forward. Now, I've already had fellow agents of mine that have told me that they've lost listings because they went into a listing presentation and said, hey, we charge 5% with that includes a buyer's agent commission, and they lose it to somebody that walks in and says, well, you don't actually have to pay a buyer's agent commission, so we only charge 2.5% with no buyer's agent commission. Well, a home buyer, especially if they're trying to sell a $500,000-$600,000 house, that's a lot of money. Okay, I can see how a home seller, I can see how a home seller can sit there and go, well, wait a minute, that's a lot of dough. I think I'm going to try it this way over here. And, if you're a good agent, if you're a good listing agent, you're going to present a plan as to exactly how you're going to sell their house. And if you are a good agent, you can at least present that, hey, you don't have to commit right now to a buyer's agent commission. You can take that on a case-by-case basis and then compare that with each individual offer that you get. And the reason why I say that is if your seller is willing to pay a buyer's agent commission, I might advise them to say, hey, look, don't commit to an amount, okay? Just let them request it, okay, request how much they want you to pay, and then, if you were willing to pay 3 but they only asked for 2, well then that's a significant savings on your part and your bottom line. Okay, on top of that, that can be negotiated. If they ask for 3, you can offer 2 or 1.5 or whatever. Okay, so me as a listing agent, it's my job to maximize your bottom line. Okay, so I have to devise strategies for you as a seller that's fair to the buyer, but also, you know, uh, increases the likelihood, or at least gives you the option of being able to save money and put more money into your pocket on a sale. So, anyway, let's go ahead and keep reading here. Any December newsletter or letter to the Federal Housing Agency, the Community Home Lenders of America, which presented small lender or represents small lenders, wrote that traditionally lenders finance buyers' agent commissions as part of the mortgage financing process, reflecting the fact that 100% of brokers' commissions are incorporated in the sale price. That's one way of looking at it, um, but I understand what they're saying, but personally, I don't look at it that way. But anyway, that's a whole other video. But its members notice that many real estate agents are already writing sales contracts that require the buyer to pay the buyer's real estate commission. CHLA said that the new model could potentially leave buyers to cover the commissions out of pocket or forego representation. And like I said, I think they're going to be models. I think the market is going to react and pivot, and I think they're going to be um, options available to people that are in that situation. On Friday, the trade group said that the NAR settlement will impose challenges mainly to underserved veteran and minority borrowers with low down payment capabilities who must be protected with respect to underwriting rules so they are not disadvantaged by changes to commission structures. CHLA continues to engage Congress and federal regulators to immediately draft solutions to ensure homebuyers are not adversely impacted, especially those that with limited funds to apply to the mortgage purchase process. Scott Olson, executive director of CHLA, said in a statement. The Mortgage Bankers Association added, while full details of the apparent settlement are not yet public, MBA will monitor the outcome as well as the likelihood of new approaches to buyer's agent commissions that develop as a result. We will also continue our engagement with the Federal Housing Administration, Department of Veteran Affairs, Fannie and Freddie about any possible guideline changes that may be needed in the future, the trade group said in a prepared statement. CASIA, the LO at CCM, expects homebuyers request closing cost credits to cover their agent commissions. He believes it could be more common among first-time homebuyers who don't have the cash for down payment plus commission payments on the purchase of their homes. However, concessions are more challenging to get in the competitive markets, which is true. If you put in an offer asking for concessions and maybe ask them to pay the buyer's agent, and you have an offer that doesn't, and you're in a very competitive market, you may be waiting a very long time, or you just may not be in a position to get an offer accepted. In a market like ours, where there's a lot of inventory, it's tough right now to buy a house, or not a lot of inventory, I should say. I was going to say, where there's not a lot of inventory, it's tough right now to buy a house, no matter what. A lot of FHA buyers, the bond programs don't have enough for the down payment to get through guidelines and throw another 2% of the cash up front for the agent commission. And yeah, it's just like what I was saying is like, these are cash-strapped people. They're barely able to get the funds together for closing costs. Now they're going to have to come up with buyer's agent commission. I think they're going to be looking for other alternatives. I would think some of them would just go directly to the listing agent, but I don't know if that's a sustainable model. Yeah, it is. It's not optimal, but going directly to the listing agent certainly, um, certainly avoids having to pay a buyer's agent commission. In most cases, I know in most states, and I know there are brokerages out in California that are actually offering this, that if you come to them directly, they'll offer to provide your representation for free if it's on one of their listings. Uh, Van Fossen said there are talks about the mortgage industry figuring out methods to finance the buyer's real estate agent commissions. As lenders, we are avidly against that, as so am I. We do not want to, as we already have a vehicle through seller concession. We should not be putting borrowers in a place to finance 2 to 3% of additional transaction over the period of 15 to 20 to 30 years in terms of mortgage, and we do not feel that our regulators such as FHA, FHFA are too keen on that either. And the reason why um, I don't like, or I wouldn't personally finance a buyer's agent commission. I would find an alternative that wouldn't require me to pay it, or at least pay a lower amount. Is if you were financing the 2 to 3% commission, you're paying interest on that for 15, 20, 30 years. So that 2 to 3%, let's just say that it's a $500,000 home, that's anywhere from 10 to 15,000. Well, that 10 to 15,000 is going to turn into 20 to 30,000 after you pay after you pay interest on all that. On top of that, it's going to affect your monthly mortgage payment. Okay, I wouldn't say a huge amount, but still, you know, it's going to increase your monthly mortgage payment, and on top of that, it potentially could keep you from being able to buy the house because if with a lot of FHA loans especially, they're higher debt to income ratios, and a lot of or a lot of borrowers are kind of right up against the limit as far as what they can afford and what they're qualified for, and if they add 2 to 3% onto the low mortgage amount, that'll potentially increase their debt to income ratio, which now they don't qualify for the house anymore. So now they're going to be forced into not getting representation or, like I said, looking for other alternatives. I think most people, like I said, with the internet, with everybody having a smartphone right in front of them, and with all the notoriety that's going on and all the news that's going on, I think people are going to go to the internet and they're going to see these alternatives. So we're going to see some changes coming up, both buyers and sellers. And I'm already seeing it. So I think agents need to realize that, sometimes agents kind of get into a little bit of a box. So they start, they stop thinking about, hey, maybe their seller might want to do something different, or maybe their seller's much more informed than they were before about real estate agent commissions. And also the buyer is much more informed about how real estate agent commissions go and what alternatives and what options that they have. Whereas before, you know, a lot of people weren't. As something that I did in my own personal anecdotal survey, I was really shocked as to how many people thought that they had to pay a real estate agent commission, that it was just required to get a real estate agent, and even the ones that knew that they didn't have to, and knew that real estate agent commissions are negotiable, they didn't. Now I think those people are going to do that. And we as agents have to be prepared for that because this is probably going to be a new world and there's going to be a lot of unintended things that are going to be coming down the pipe. So anyways, guys, hopefully this helps you. Video was a little longer than I intended it to be, but there was a lot of information here and I wanted to make sure that you get it. Anyways, guys, this is Ben, the Real Estate Pro. We will talk to you next time.